All the smartest people know what's going on in the financial markets, so let's get caught up on what happened in business and finance yesterday. Let's start with the big picture. So stocks finished mixed on Wednesday after a pretty volatile day. The S&P 500 fell about 0.5%, the Dow actually gained 0.5%, and the Nasdaq, which has a lot of tech names, fell more than 1.5%. So the main reason it was because of a big sell-off in software and semiconductor companies. One company in particular set the tone, Advanced Micro Devices or AMD. The chip maker fell more than 17% after failing to impress investors with its predictions for how well they'll do in the months ahead. The company dragged down most of the chip sector. Companies like Micron, Lam Research, and Applied Materials also dropped sharply. But it wasn't all bad news. Healthcare stocks helped balance things out a little bit after strong earnings from companies like Eli Lilly and Amgen. Speaking of Eli Lilly, this was one of the biggest winners of the day. The stock jumped more than 10% after reporting huge growth. The company is now expecting revenue this year to come in way higher than analysts had originally predicted. Meanwhile, Alphabet, Google's parent company, reported strong results after the market closed yesterday. Revenue and profits both beat expectations, and revenue from their cloud business grew nearly 50%. But the stock fell in after-hours trading because the company announced it plans to spend a massive amount, up to $185 billion, on AI infrastructure. Investors love AI growth, but they also get nervous when they see spending this aggressive. In terms of economic data, we got a new report yesterday from payroll processing company ADP, which showed private companies hired far fewer workers in January than expected. Hiring is still happening, but the pace has clearly slowed down, and this is important because it suggests the job market may be cooling, which is something that the Federal Reserve considers when making interest rate decisions. The official jobs report was delayed this week because of the government shutdown, so investors are still waiting for that, which will hopefully come next week. Yesterday, the U.S. signed new agreements with multiple countries, including Argentina, to secure supplies of critical minerals. These are essential for things like batteries, AI technology, and defense, and the goal is to reduce reliance on China. This is part of President Trump's Project Vault. Quickly, some other notable highlights. Solar company Enphase surged more than 36% after better than expected Q4 results. AI server company Supermicro jumped nearly 14% after raising its annual revenue forecast, citing continued strong demand for AI servers. Uber fell over 5% after its forecast for first quarter profit disappointed investors, despite reporting better than expected Q4 revenue. Looking ahead to today, it's a big day for earnings. We'll hear from Amazon, Shell, Sony, Bristol-Myers, and several major financial firms, which could move markets. On the economic calendar, we'll get new jobless claims data and the Challenger job cuts report. And tomorrow we get consumer sentiment, which tells us how confident people are feeling about the economy. So the big themes right now: tech volatility, massive AI spending, and a job market that may be cooling. Follow for market updates that actually make sense, and check out my newsletter for a deeper dive.